All right, let's talk PayPal. They just dropped their third quarter earnings and the numbers are looking pretty good. Today we're going to really dig into what CFO Jamie Miller laid out, because it tells us a lot about where the company's at, and more importantly, where it's headed.
So, here's the game plan. We'll hit the big headlines first, then figure out what's really fueling all this growth. After that, we'll check the financial scorecard, talk about how they're giving back to shareholders, and wrap up with their forecast for the future. Let's get to it. Okay, so first up, the main story here is that PayPal had a really solid quarter. They beat expectations, and you can tell it's given them a nice boost of confidence.
The number that's got everyone talking is this one, a 12% jump in their non-GAAP earnings per share compared to last year. Now, how'd they pull that off? Well, it's kind of a 1-2 punch. First, their main business is just making more money. And second, they've been busy buying back their own stock. Fewer shares on the market means each one is worth a little more.
And digging a little deeper, that earnings growth was really powered by a 7% increase in what they call transaction margin dollars. This is a super important metric. It basically shows that the core of their business, processing payments, is becoming more and more profitable.
So where's all this growth actually coming from? Well, the numbers point to some serious momentum in a few key areas, especially in getting people to use PayPal and Venmo out in the real world, at actual stores.
And check this out. Their push into physical retail is really taking off. Spending with their debit card and tap to pay is up a massive 65% from last year. That shows they're making some serious headway in a space that traditional credit cards have owned for, well, forever.
And then there's Venmo. Pay with Venmo is just on a tear, surging by 40%. It's becoming a go-to checkout option, which is a huge deal. It's turning Venmo from just an app you use to split dinner with friends into a real powerhouse for commerce.
And just look at this momentum in flexible payments. Their buy now, pay later volume is still growing at an impressive 20% clip. It just goes to show you how much people want these installment options, and that PayPal is carving out a huge piece of that pie for themselves.
All right, let's zoom out a bit and look at the overall financial scorecard. This really paints a picture of a business that's not just growing, but is fundamentally healthy.
So, total payment volume, that's the dollar value of every single transaction that goes through their platform, grew 8% to over $458 billion just for one quarter. It's a clear sign that more and more money is flowing through the PayPal ecosystem.
But, it's not just about how much money is moving. What's maybe even more important is how often people are coming back to use the service. And this next number tells us exactly that.
And here it is, a 5% increase in transactions per active account. Now you might think, 5%? Is that a big deal? And the answer is yes. It is a huge deal. It means people aren't just signing up and then forgetting the app is on their phone. They're actively using it over and over. It's becoming a habit, and for a company like this, that kind of user engagement is the holy grail.
So when you have a strong quarter like this, the big question becomes, what do you do with all the profit? Well, PayPal just announced a pretty major change to how they're handling that.
And this is the headline for investors. For the first time ever, PayPal is going to start paying a dividend. They're calculating it at a 10% payout of their net income, which really signals a new phase of maturity for the company. Now, this new dividend isn't replacing their stock buyback program. Think of it as a new tool in the toolbox. The big goal is to return a whopping 70 to 80% of their free cash flow right back to shareholders. Buybacks will still be the main way they do that, but the dividend is a nice new addition.
And they are definitely not slowing down on those buybacks. They bought back $1.5 billion worth of shares this quarter alone, and $5.7 billion over the last year. That's some serious capital return.
So what does a strong quarter like this mean for the rest of the year? Well, based on these results, PayPal went ahead and officially raised its full-year forecast. That's a big sign of confidence. They're now projecting that full-year non-GAAP earnings per share will grow by 15 to 16%. It's just a crystal clear signal that they feel really good about the business's profitability and where things are headed for the rest of the year.
But, it's not all sunshine and roses. The company is also being realistic about some challenges on the horizon. The CFO, Jamie Miller, pointed out that their credit business had such a great year last year, it's going to be tough to beat those numbers. And then there's the elephant in the room, right? The global economy is, well, it's uncertain. And that could mean people start tightening their belts, which affects everybody.
And that really leaves us with a big question.
doesn't it? PayPal has undeniable momentum from its key growth areas like Venmo and Buy Now, Pay Later. But the road ahead is really going to test whether that powerful internal engine can outrun the broader economic headwinds that are affecting us all.